Hello, fellow investors. It's us, Nordic Finance, with me,
And me,
Lucas,
Marcus.
here again with the Financial Podcast. In today's episode, we're going to discuss how to get started with investing.
Yeah.
Now, Marcus, let me ask you, what do you think of this topic?
Yeah, I think it makes sense given that we are setting our bases here. I think this is a good topic to get started with.
Yeah, absolutely. And I think a lot of people might, or for me personally, when I got started, which I make sound like it was a long time ago, but it was maybe a month.
Yeah.
But I wanted to get started for the longest time, but I thought that all the options out there were just too expensive, so I didn't really know how to start without having any real amount of money.
Yeah, I think that's a common misconception that at least I hear a lot is that investing is basically for people that already have a lot of money. So, okay, you can make a lot of money from investing, but you also have to have a lot of money like to get into investing. And I think this is a common misconception.
Yeah, I couldn't agree more. I think investing is a tool or a way to get to the point where you have a lot of money, not just the end.
Yeah, and legally we can all
End
like
product.
participate. So I mean, you are a bit limited if you are short on cash, but I mean, you should be able to get some investing done for sure.
Yeah. So today we're basically going to discuss some basic principles and how to get started, and some rules that you should probably
Yeah,
follow.
especially in the
for the
start. Like this is for real beginners. This is not gonna be the pro tips on how to get from $10 to a million or something like that. It's just some general tips you probably should think about when getting started.
Yeah, and what you can expect in return.
Yeah.
Basically the ROI, the return on investment for your money, how you get started with that. So the first rule that we want to present to you is only invest what you can afford.
Yeah,
Don't.
I think that can't be stressed enough. Like that's one of the golden rules of investing, at least for like beginners and people with just a bit of cash, like not big time investors, is that you should only always invest what you can lose, because
Yeah.
it might happen. It certainly might happen.
Yeah, and when I say only invest what you can afford, I don't want you to think of it as only invest money that you expect to lose or that you can count on losing.
Mhm.
Of course, as Marcus said, there's always a risk that you
Might
lose a
yeah.
big portion of it. But also you need to realize that this is money that you won't be able to access for a long
Yeah,
time,
that's a
probably.
really good point, actually, because that's a problem with certain kind of investment is that you are promising to locking away your capital for at least 10 years. I mean, you cannot exit it, so you have basically lost it until you receive it back with interest.
Yeah, and even in the cases where you don't lock it away, so to say, but based on what I've heard, the place where most people go wrong, really, really wrong, is that they get very excited when things are
Yeah.
going good. Things are already quite expensive. They get on the investment train, and then when things start becoming a bit more shaky, instead of like gritting their teeth and keep their plan doing monthly contributions, we'll get into that shortly, they decide to jump off and take out the money they've already
Yeah.
invested, usually taking quite huge losses. And maybe it's because you have put money there that you needed for something else. This is why you need to have the safety net, some sort of safety net in terms of money. This is something we touched on in the previous episode, but we can mention it again, that it's really good to have.
Emergency fund, and like especially like in our case also, we are pretty young. We might invest in like buying our own house at some point or something like this. You shouldn't invest too much at this stage of your life, because this money that you might have just sitting around might actually be put to really good use really soon, because you have to have like a down payment on a house. Well, you got it sitting in the bank instead of invested in something you are not sure you can easily get money out of. I mean, sure, you can get at some point, but it's never sure that the money you have invested, you're gonna get exactly that amount soon, like if you sell them. Usually when I've traded stocks, I usually receives it in like a day or something like that, and usually at the price I did sell them for, because you can set a range on how much you want to sell them for, and it's gonna sell within this range. But yeah, you shouldn't like think of it as free capital, because it's not.
Yeah, I couldn't agree more, and it's a really good point that if you're young, you might need,
Yeah, for a,
and you're planning on buying something big,
yeah,
like
a house,
an
car.
apartment or a house. Of course, you want to save for that first, so that you have enough of the down payment. But I think this quite smoothly brings us on to the second point, which is then how, if you want to get started and you have some extra cash, but you don't have that much of it, how do you invest cheaply?
Yeah, and we should probably explain why you should invest cheaply, because like that might be the one of the biggest hurdles. If you put like two hurdles for new investors, and especially if they don't have a lot of capital in the beginning, it might be that they don't have the knowledge and they think it's really hard. That might be like the first issue. And the second one might be that they're really afraid about the fees. How much money are you going to lose from like buying stocks, buying into funds, things like this? And banks can be really expensive.
Yeah, very true.
Yeah.
So you probably have more experience with banks.
Yeah,
so
I made some mistakes when I started out. I started out like a few months ago, and actually, to my dismay, I actually started through like a personal bank, like a savings bank, where you have your like. They had a small section for like buying stocks. It wasn't even optimized in the way that I can actually buy stocks from other countries. I could buy shares and some funds. But anyways, I bought mainly stocks at this point, and the fees were immense. I am really gonna have to make like a lot of money back to even sell at a win, because the fees were basically like 10 euros for each buy. What do we call it again? For each purchase I made.
Transaction.
Yeah, transaction.
Transaction.
Yeah. For each transaction I made, I had to pay like 10 euros. And that means
which is absolutely insane, especially since if you want to invest in stocks, for example, cheaply, you probably want to buy some cheap stocks. So then
penny stocks
invest.
Even.
So then sometimes, for me, I did the same thing basically when I got into Nordnet for the first time. That I instead of investing in index funds, which we will talk about real soon, like I was supposed to, I decided to try and buy just a few stocks to see what it was like. And it wasn't 10 euros, it was 3 euros, but the stocks were worth like 60 cents. So they're not gonna and I only bought like two of them, so they're not gonna they're not gonna go up with like 1,000%.
You're never getting your money back from those. That was a bad trade.
So that was like a trial and error.
But you have to do these things in the beginning. You definitely have to make some mistakes, but you should like quickly learn this one. I think that try to find like actual investment platforms that are dedicated to investment. Like Nordnet is not a bad one, I'd say. Like I personally prefer the Giro, and I think you can lower your arbitrage a lot on that place. But it might be a little bit unsafer for some, like if you care a lot about risks. I think maybe Nordnet might be a better choice. You have to decide these things yourself, because it's like your money you're like putting away in these kind of companies anyways. So I'd suggest that although you always aim to invest cheaply, you should also always check the legality and that everything is perfectly legal. You're not in like any danger of the company just taking your money, and that's it. You can't really do anything.
And I want to defend Nordnet real quick, because it was absolutely me who was being an idiot, because they warned me several times. Again, their site, if you live in Finland, it's in Finnish, and I study at a Finnish university, and I can defend myself that my Finnish isn't that good, but it's good enough that I understood that there were fees involved. But then when you were supposed to buy the stocks, it didn't say right away, but it said on the transaction afterwards. So that's why I made that mistake, but it was still 100% my own fault.
It was the same with each case for me as well. Like I knew that the fees were really high when I bought the stocks, but I was so inexperienced at this time that I saw this as my only option at the time, because I didn't think I would like get seriously into investing and actually open an investment account, because there are so few options here, and I don't really like them a lot, like the Giro and Nordnet. They each have their faults. I mean, but they are what we have, and they're fairly good. They're definitely better than going through your savings bank and trying to make investments, because you're gonna lose a lot and you're probably not gonna gain basically anything, because the fees are gonna eat up everything.
Yeah, and if you live in the States, you have a lot more options.
So this is more.
But for us here in Europe and the Nordic countries.
Yeah, mainly Europe. I think like Germany and England probably has no issue with this. They have a lot of choices. If you live in a smaller country that is not heavily involved in investing and things like this, try to find an international one is what I'm gonna say.
So then, how do we, if buying stocks is so expensive in terms of fees, how can we still get into the investment game without losing all of our money on fees? I'm gonna answer my own question
I
here.
thought you might.
The answer is basically funds. If you're using Nordnet, you can contribute to a fund, and you can even set this up automatically. So automatically each month from your account, you can specify the date and a specific sum of money, at least 15 euros. That's the absolute minimum you can contribute with, or you can add to the fund. But it's going to be added automatically every month if you set it up that way. You can also only invest like when you want. But because of different factors, there's something called time averaging, which I'm sure we'll talk more about in the future. But it might be a good idea to set it up automatically. Anyway, if you use funds, and especially index funds, but any funds at Nordnet, you don't pay any fees when you put in or take out money.
Oh, that's really
You pay taxes on any gains.
Yeah, obviously.
And you pay
your taxes.
you pay a fee in terms of a percentage of the total amount that has been
accrued. But do you?
Accrued in 1 year, so annually. And these percentages are very low, especially if you're investing in index funds. So this is basically the next part of this discussion, how to get started. In the past, mutual funds have been very, very popular. Mutual funds, for those of you who don't know, are actively managed funds. So you have basically experts who are trying to pick stocks for you, and these stocks are then supposed to outperform the market. Historically, very few people can do this. Like actually very, very few. There are mutual funds that are so good that they are worth it, but since there's let's say they do a bit better than the overall market, but it still doesn't really matter because the fees are usually like 1 or 2% higher. So the market on average, at least for the past 10 years, have been averaging 7.8% in growth. Of course, it doesn't guarantee future results, but this is what we generally tend to go on, and there's a whole discussion to have about that, if that's something you can even assume that it's going to continue growing at that pace, but we're not going to have that now. But assuming that it keeps on growing at say 6-7%, if you pay 2% out of that in fees, your initial reaction is going to be, okay, that's not much. It's worth it, especially if they can outperform the market. Usually they can't again, but 2% still, since we're supposed to keep it there for several years, so there's gonna be a compounding effect on that as well.
And especially as the sum grows.
Yeah, and just anything that messes with your ability to maximize your compound interest is it's usually a bad idea.
Yeah.
And there's really good calculators for this online that you can compare how much you're gonna make depending on the fees and so on. I urge you all, if you're unsure, to go and check that out. But this is the reason why I, at the moment, recommend index funds. To me, index funds are just a really good way to get started.
Yeah.
The main idea here is that if you buy an index fund, you automatically diversify your risk a lot, which is very important, and we will talk a little bit more about that. And also maximize the upside, because generally the overall market has gone up in the past if you take a long enough time period, like 10 years or more.
In general, you get like money backs from these things because things tend to get better. Nonetheless, what we like to imagine ourselves. So usually you actually get money back, but I'd say that funds is like more for the investor who doesn't want to take an active part maybe in the investing itself.
Yeah, that's a really good point, that you can have a really kind of set and forget
exactly
mindset, that you don't have to try to time anything, which you won't probably be able to unless you're really, really good. You decide that I'm gonna contribute to an index fund 15 euros a month, maybe 100 euros a month, and you do it to a few different ones, maybe 25 to each, 4 different ones, and you get a really nice diversified portfolio in different companies, in different stocks.
Unless something really massive happens, I think your money is fairly safe.
And there you already have a really, really nice start with only like 100 euros a month or 15 euros a month, as low as 15 euros a month. So I think that's a really nice place to get started, because then it's a lot easier for you. Like this, I think this is the main point, that it's so easy to procrastinate on these things. But if you just do this one thing, that you set up this one monthly investment, you're going to get more familiar with the system, you're going to get more interested. that's why I'm here right now doing this podcast with Marcus, is because I took that first step, and then you get more interested as you go along.
Or I'm gonna just make a point out of, maybe you don't have to be like more interested. You could also just set it and forget it, like we spoke about.
Yeah.
This is usually I mean, it's not the best tactic, and we're certainly not gonna argue for it on the financial podcast, because it kind of defeats our purpose. And I generally don't think it's a good strategy. It's not a good strategy. You shouldn't set it and forget it. You might lose all your money. You certainly are not optimizing it. That's to be sure, because not putting any effort. So I think it's a really good strategy for people that really hate fiscal matters, and they just want some way of kind of like maybe insuring their pension, or making sure that they are going to have some money ahead, maybe save up for a trip or something, that because you are getting money usually out of these funds.
Yeah, making your money work for you, as you talked about.
If you have
building your money machine, and you're getting your nest egg.
Yeah, exactly. Because it's better than just having them on the bank. But you don't have to be a financial expert. Like, this is the very most simple way to invest your money. Like, just invest it in some kind of index fund or something like this. Maybe make a monthly contribution that is suitable to you. Set it, forget it, watch it get some percentage each year. It's not going to be much, but it's certainly going to be better than just having it on the bank.
But when you say it's not going to be much, you can actually, like that 7.8%, I'm not kidding with that. That's like a real thing that you can expect.
Well, that's quite a lot.
so and that's actually not too bad. We're going to be comparing a lot of these different investment tools later on. And as a bonus, maybe you've heard of someone called Warren Buffett, third richest man in the world.
Yeah, maybe.
Maybe, I don't know. If not third richest man in the world, he has made all of his money through investing. Yeah. This is what he recommends for the everyday person.
Yeah. Pretty much everyone can do it, and it's very low effort, because if you're gonna get into actual like investing, and maybe we can a little bit just touch on the other point, next point in our video, which was stocks. But I think we have already covered a lot of this. Is that if you're gonna get into stocks, you really have to have a completely different mindset. You're gonna have to be like active. You might have to look up companies, like, what is this? What am I gonna do? Like, maybe even go so far to check their annual report, check their financials, all this stuff. You know, you don't have to do anything like that when you invest into a fund. Usually, you can just invest in at least a credible fund and be pretty sure that you're gonna get a certain percentage each year, and you don't have to think anything about anything. Like, you don't have to check any accounts or financials or be scared. The only thing you have to be like pay even a little bit of attention to is how is the general economy in the world doing, and how is your local economy doing, like the one you have your funds invested in. If things are bad here, you are doing bad also. For now, during this corona crisis, a lot of funds have a lower value, and they have a lower expected return because things are pretty bad. But as soon as this thing blows over and maybe the economy recovers, hopefully, then things will be back to normal, and you will probably have a very safe investment again, doing the percentage Lucas was just telling us about.
Yeah, and I think that moves us back to the first point a bit there, that this is why you need to only invest what you can afford, because you can't afford to panic and take it all out at a loss, because that's how you lose money. Yeah. Like, that's the real how you lose the most money.
And that's applicable to stocks mainly, I think. Like with funds, generally, I don't think you have such a big issue with this. I know you can sell your fund shares, like parts of your funds, to other people as well in the secondary market, which is fairly common. But like with stocks, it's really important. You never want to sell when the value is dropping, especially hard, because for two things: the value is being lowered, and you're getting less and less money back. And the second thing is, it might be really hard to get rid of these stocks now. Nobody wants to buy them.
But it's exactly the same with the index funds, that you can choose to get out at any time with a lot of these. So that's what can be difficult if things get harder and you have a couple of hard years that you might be tempted to get out.
Yeah, sell at a loss. But I think we can talk more about this in a separate video, like about investment strategies.
So just a quick recap of today's financial podcast. Only invest what you can afford. You can invest cheaply if you do it through funds.
Yeah,
especially recommending index funds.
Like investing platforms which have a lower like fee. which you should definitely look for. Look for, if you can, if you're from a small place, look for international brokers, I'd say.
Yeah. And then through these index funds, for example, you get already quite a nice diversification, which is always
diversify,
really nice.
diversify.
Yep. And Warren Buffett recommends them. But overall, thank you so much for listening. Happy investing.
And
don't do anything stupid.
Yeah, and please like, subscribe, all that good stuff. Give us some comments, please.
Wherever you're hearing this. We'll see you on the next episode.